We've made quite a few videos on the channel regarding financial literacy, but we've never discussed how teenagers, like myself, can be financially responsible, even though it is crucial to gain financial knowledge as young as possible. With that being said, this video will discuss some ways that you can be financially accountable as a teen. Now keep in mind, there are many ways for a teenager or a young adult to make smart financial decisions, so this video will only cover the surface level. One of the many subjects we've talked about when it comes to finance is investing in the stock market. Now I know that the vast majority of teenagers don't have a whole lot of money, so what's cool is that you can invest in partial shares. With partial shares, you're able to invest in less than one share of a company, and even though that stock is small, you would still own a part of that company. Investing in partial shares can be beneficial, not only if you don't have a lot of money, but if you want to invest in multiple stocks. There are many apps and services that you can use to do this, including Fidelity and Schwab, which allows you to make youth and custodial accounts. Now, of course, you must keep in mind that the stock market goes up and down, and volatility is almost inevitable. Maybe you still want to invest in the stock market, but perhaps you would prefer something bigger than partial shares. If that's you, you might want to consider investing in an index fund. Index funds offer small pieces of different stocks and combine them. This way, instead of investing in individual shares, you can have a variety of stocks. This can be beneficial as if one of your stocks takes a dip, you still have a few other investments that have the potential to go up. A possible downside is that you may receive lower gains than if you were to invest in something else. Another option for being financially responsible is investing in a high-yield savings account. These savings accounts produce more interest than regular savings accounts and can grow your money at a faster rate than traditional bank accounts. These savings accounts are also fairly low in risk. As a result of this, the returns may not be as much as other forms of investing. Even if you can invest in a high-yield savings account, however, saving money, budgeting, and creating emergency funds are useful habits to get into. Perhaps you are concerned with retirement. In that case, you could open a custodial Roth IRA, which has tax-free growth, flexibility, and does not have a required minimum distribution. You just have to watch out for income and contribution limits, as well as the fact that you won't get an immediate tax break. You may want to consider taking a look at bonds. Bonds, which are typically used by the government, see you lend money to the bond issuer, and in exchange, the issuer eventually repays you, but with interest. Think of it as an IOU. This is a good choice if you want a type of investment that is low risk and produces a relatively high return rate. Just be careful, as inflation might outpace the rate of the bond, and values can drop when interest rates rise. In terms of gaining financial knowledge, you may want to consider reading financial literacy books, such as the Money Books, which describes finance in a way that all ages can understand. By doing this, and by doing additional research on your own, you'll be a financial star in no time. Overall, there are a myriad of ways to be financially responsible. From high-yield savings accounts to bonds, from the stock market to reading books, and from watching Money All-Stars to building a budget, there are many ways to plan for your financial future. I'll link some resources down below for additional research.